Hello everyone. Today we'll start with TRCS demo session. Okay, so we'll start the TRCS demo session. Let's get started. Now first we'll understand what is tax reporting. So tax reporting is a comprehensive global tax provisioning solution for multinational companies who are reporting under GAAP, that is generally accepted accounting principles, or IFRS, that is International Finance Reporting Standards. So basically tax reporting is a crucial aspect of financial management for business across the globe. Basically it entails, like, it is involved in gathering, computing and submitting tax related data to meet the regulatory obligations. As a result, businesses are increasingly using cloud-based solutions in the digital age to automate and verify the correctness of their tax reporting procedures. Basically, the tax reporting in Oracle Cloud EPM, that is, it is one such solution, that is TRCS. This article basically the TRCS one, it what does it do? It investigates the deployment of tax reporting in Oracle Cloud EPM. It explores the essential features. We discuss them, what are this, and we identify in TRCS. We'll identify what is the important advantages and disadvantages. Now, it basically TRCS provides us out of the box reporting for the tax provision, country by country reporting, which is some companies need to do that, the country by country reporting, and it provides a general platform for the process improvement for the corporate tax function. So as we said, why tax reporting, why the TRCS came into the picture. So the reason is that the tax reporting, you can use the same platform as your corporate closing process, and can therefore be directly integrated using the same metadata. As a solution, the consolidated pre-tax income can be reported by the legal entity to calculate the consolidated income tax provision. So basically, whatever if the source is FCCS, then you can follow the same metadata in your TRCS as well. Okay, so when corporate accounting finalizes the period end closing, all the required amounts like permanent and temporary differences, tax rates and exchange rates, all those, the tax reporting automatically calculate current and deferred tax income tax provision by entity as well as by jurisdiction. So in others you do it manually. Here once you load the trial balance and the tax rates and the deferred tax rates, after that you can directly the tax reporting automatically will compute and give us the current and deferred income tax provisions by entity as well and by jurisdiction as well. Okay, so that's why it says it provides out of the box reporting for the tax provision, the CBCR reporting, which is applicable on some companies who report the related price transaction, related party transactions, or what we say the transfer pricing. So they have to give the country by country report. So they have to follow this compliance. Okay, and TRCS also provides a general platform for process improvement for the corporate tax function. Basically, this solution covers all the phases of corporate tax preparation process, including tax automation, data collection, tax provision calculation, return to accrual automation, tax reporting and analysis, and country by country reporting. So basically it will cover all these phases, and the terminologies and the detailed information about this you will get in our in the later sections. Now I'll move to another slide. So basically now we'll see what are the major functional utilities of the TRCS. So first is tax automation. That means we can easily load the data from ERP to tax reporting software, and we can load the tax accounts, trial balance data, and tax rates, deferred tax calculation rates, and then we can automate the entire calculation process by the TRCS. So after that it will helps us in tax automation. Okay, just you need to load your trial balance, tax rates, and deferred tax calculation rates, and TRCS will automate the entire tax calculation process. Now second, it is tax provision calculation. So it helps us in calculating the tax provision, namely current tax provision as well as the deferred tax provision. The third functional utility is return to accrual automation. Through this, we can automate the data which was filed through the return, and in case there are any adjustment which are required or there are any differences between the return data or the current year provision data, we can adjust it through the return to accrual automation. So basically if there is any adjustment or details which needs to be done from the prior year, okay, sorry for the disturbance. So we were on return to accrual automation. Basically this means that if there is any adjustment which is required or any difference between the return data or current year provision data, you can, whatever kind of adjustment, you can do it through the RTA. Now the fourth is tax reporting and analysis. So here we can also build various tax reports, namely the consolidated tax reports, effective tax reports, national effective tax report, statutory effective tax report, regional effective tax report, and so on. So it helps us in tax reporting and analysis. Now TRCS also helps us in preparing the country by country report, which means the global entities or the multinational companies which are required to report on this feature or prepare the country by country report, whereby they have to report all the related party transactions, employee details, etc., or the transfer pricing details, in order to properly report on basically the transfer pricing provisions that are applicable to that entity. So they need to prepare the country by country reporting, which this feature has been provided by the TRCS. Now the another functional utility is interim provision calculation. In case there are quarterly, monthly, half-yearly reporting in an organization or legal entity, then interim provision can be calculated on the basis of annualized estimated effective tax rate. Because of this, you can calculate your interim provision. Now the another function utility provided is working with the net operating losses or credits. In case there are any losses, then we can automate the process of carrying forward, deferring, or utilizing the losses or credits which are available for a particular legal entity. Then next is star automation. The functional feature basically which we can discuss is tax account roll forward automation, through which all the tax accounts which are required to be carried forward can be rolled forward the next period. It can be done through this because of the TAR automation. So these were basically some of the functional utilities, the major functional utilities provided by the TRCS, and because of which it ease our life in respect of the tax reporting, which the companies need to comply it. Okay, so the detailed, the words which you hear just from me, so you will be getting it in detail in from our next session. I'm just giving you the overview about all these functional utilities. Now we'll see the features. So as we discussed that the tax reporting calculates company's global tax provision, effective tax rate and deferred tax. So in case an entity is following US GAAP accounting standards or maybe following the IFRS, so we can create a provision by taking all the book differences through these particular standard as well. So basically, what is the flow? So the flow of the process is that we load the trial balance data into the application and then we input the tax rates and all the adjustments that we want or are legally required for the calculation of current tax or deferred tax, and then we can just run the business rule and see that the journal entry can be passed directly through the tax automation process. So when, as we heard this word tax automation in our major functional utility in the last slide. So here it says, so you just need to load the trial balance data and input the tax rate and whatever adjustments which we want in our application, we just load it. Then the TRCS will calculate the current tax or the deferred tax, and we just need to run the business rule and see, and we'll see that the journal entry will be passed directly through the tax automation process. So when the corporate accounting finalize period and close data and all the required amounts such as permanent and temporary different tax rates are available, foreign exchange rates are available, and they are entered in the system, then tax reporting will automatically calculate the current as well as the deferred tax provision by the legal entity as well as by jurisdiction. We can create basically the provision not only for the national domicile, but we can create all the provisions for each and every division and adjusted by tax reporting cloud services. So basically, if you understand from the provision calculation, once the provision has been calculated, tax reporting produces a journal entry and it also produces the draft income tax financial statement disclosure. So whatever all the disclosures requirement which are there for a particular legal entity will be computed and produced by this particular reporting services, tax reporting services. And this application also complies with the standards for accounting for income tax under US GAAP and IFRS. Now I'll explain you the tax provision process. If you look into this slide, there's one diagram shown and it shows you the flow. So basically, when we look at the tax provisioning process, so first of all, the trial balance data will be loaded or will be input in the tax automation, and from there provision will be calculated by entering regional and by entering the national and regional tax rates. Also, in case there are any RTA adjustments or the return to accrual adjustments, so there is any data from the previous year return which needs to be input in the current year data, and in case there are any adjustment required in the previous year return which needs to be input in the current year data, so we also do that through this application. Once the this current provision has been calculated as well as the deferred provision has been calculated, we will be able to generate the various reports or the final provisioning report, namely statutory reporting, consolidated effective tax report, and tax account roll forward as well. From there, the application will directly create the tax journal entry in the legal entity data and we'll be able to view the footnote and disclosures as well. So this was whole the tax provisioning process. Now the same is explained in detail in this slide. So basically the loading of data has to be done by the administrator. So the administrator will import the trial balance data legal entity wise. So each and every legal entity which is present in an hierarchy of an organization will have its individual data loaded by the administrator into the TRCS. And once the data is loaded, the administrator will run the tax automation process by inputting the various rules and tax rates and adjustments as well. So once the data is loaded, the administrator will run the tax automation process, and tax automation process will help to populate the provision schedule. So the provision schedule, now it will be extracted from the trial balance, and then the automated provision schedule which has been extracted, the administrator or the user then can enter the adjustments which are required to be input in order to calculate the accurate or the current tax provision. So basically the automation can be done through tax automation process. But in case there are any adjustments which are required like RTA adjustments or any data which has been left out in previous return which needs to be input in the current year data, we can do that manually as well. So once the automated amount are generated, then there are data forms to include the tax rates, the adjustments for the tax, the additional tax amounts in case there are any due to the rate changes, etc. The RTA amounts as well. And once basically the automated and the manual amounts are input, the system will automatically calculate the final current provision, deferred provision, and it will automatically create the journal entry and will roll forward that entry to the next period, and the effective tax rate reconciliations reporting will also be generated, namely the consolidated effective tax reporting and the statutory effective tax reporting. So this is basically the whole process of TRCS or the tax provisioning process. Now we'll see the sum of the predefined dimension members which are there in TRCS. Basically in this TRCS application, there are 13 predefined dimension members which are pre-built or predefined, and no additional custom dimensions can be added in this particular application. Point to be noted. Okay, so the dimensions which are there in the application include account dimension, period, consolidation, data source, currency, intercompany, entity, movement, multi-gap, jurisdiction, scenario, year, and view. So 13 predefined dimension members are there. So now we'll see the account dimension. Basically, it will represent the hierarchy of natural accounts, including the tax related accounts. So then what do you mean by the natural accounts? It basically include the book accounts or the accounts which are there as per the IFRS or the US GAAP, whichever applicable to the entity, and will also include the tax related accounts including temporary difference accounts, permanent difference accounts, tax roll forward accounts, RTA accounts, and other adjustment accounts including loss accounts, tax credit accounts, research and development accounts, and so on. Now we'll see the second one, that is period. Then it will represent the time period such as quarter and months. In this application, period will be denoted by P1 to P14. In other applications also you must have seen, like if we talk about the FCCS, we there at the time of creating the application we have the 12-month period or 13-month period. So basically 12 months is if we enable the 12 months, so it will be from like Jan to December or any financial year from April to March. But if we select the 13 months, so basically the 12 months plus 13 month, that extra month will be for the adjustments what you need to do. Similarly in TRCS we have 14-month period which will be denoted by P1 to P14. So basically P1 to P12 will be the same like Jan to December or March to April, depending upon the financial year which entity is following. And P13 and P14, the two additional months, will be for RTA and audit respectively. Basically, P13 will be for RTA adjustments and any audit related adjustments that we'll input in P14 period. Okay, so the next now the dimension member is consolidation. So it will store the intermediate results during the consolidation process. So we'll have to run the consolidation, which is very important business rule in this application, as well as because all the tax automation, RTA automation, that CBCR automation, they are directly linked to this consolidation business rule. Once that particular business rule is run, then only we can see the result of all the particular automation that we have created in this application. And it is also required to see the data at the parent entity or at the consolidated level. So if there's a particular entity which has lot of subsidiaries, so those subsidiaries will be the legal entity, and then the tax is calculated at the legal entity hierarchy level for each entity individually, and the data then it is total to the consolidated parent, who is the parent of all its subsidiary. So there is no separate tax calculation for parent tax level. So but all the data which is calculated entity wise or legal entity wise tax calculation will be totaled and will be rolled forward or carry forward to the parent level. So at the base level, basically we calculate the tax and then we roll forward it to the parent level. So that will also be performed by the consolidation. And the consolidation dimension will store all the results which will show the entire consolidation process when we run the consolidation business rule. Now the fourth dimension is data source. It will be used to store different types of input, namely managed data, data input, supplemental data, as well as some other like journal input and so on. EPU can be there, and some we can create if we taking the data from some specific source. So we can create custom data source as well. Managed data will generally, like if you know, be used for the data management. Data input will be used for manual input. Journal input like for passing the journal entries. Now next is currency. It will store the currency or translated value for all the entities. Now intercompany. So it will store entity members for the intercompany transactions in case there are any intercompany transactions between the legal entities. So we can assign this particular attribute, and then the data will then be stored in intercompany dimension. Seventh is entity. It represents the entire organizational structure of the company. The parent-child hierarchy will be present in this particular dimension. Now the next dimension is movement. It will capture the movement details of the account. So the trial balance data will generally be loaded in the trial balance underscore close movement for the tax related accounts, and for the natural accounts like or the book accounts or the financial accounts, they which means the same will be loaded in their specific movement, that is their individual account wise movement. The next is multi-gap. In case of multi-gap is followed by a particular structural entity. So if there is a parent entity and there are various child or subsidiary entities, and those different subsidiaries are following different gap, namely US GAAP, IFRS, IGAP, etc. So this particular dimension can store the data in different gaps for different legal entity hierarchies. Which is so above till now the 9 dimensions which you have seen, which is almost the same as we see in the FCCS. The new dimension which is not there in FCCS is jurisdiction. So basically it is an additional dimension for this particular application because the tax calculation takes place jurisdiction wise, and so there is national jurisdiction and a regional jurisdiction as well. and the tax is calculated for national domicile and regional domicile. So there is United States, which is national domicile, and there are regions which are under the United States, like maybe Alabama, Alaska, and so on. So the tax is calculated for these different regions as well. And when the tax is calculated for national region, that is United States, tax for each and every region will get adjusted, and then the tax will be calculated for United States domicile. So basically, this was a new dimension which has been introduced in the TRCS, because we represent the tax national jurisdiction wise and regional jurisdiction wise. Now the another is scenario. So there's a scenario dimension in case we want data to be loaded for actual or budget or forecast or plan. So we can load the data for different type of scenarios. Now the next is year. Basically it will represent the fiscal or the calendar year. Calendar year, if we say like from 1st Jan to 31st December, and the fiscal year begin or starts on any day and end precisely 365 days later. Now we'll see the next dimension, that is view. It will control the representation of data across the time period. So if there is periodic view, quarter to date view, year to date view, but generally we use the periodic view because most of the time the periodic view represent the tax provision accurately in this application. Now the point to be noted here is that additional custom dimension cannot be created for this application. Now the next is functionality by the predefined roles. So the roles in this application, they are similar to the other application which are assigned to a particular user. So user can be assigned either a viewer role, user role, power user role, service administrator role. So different function can be performed by different type of users based on their roles that have been assigned to them. These roles, they are hierarchical. So in case a particular person either is a viewer or has been assigned the role of a user, then definitely he or she can have the power of viewer, or if a particular person may he has been assigned the role of power user, then the user will have access to all the functionality that a user can perform, and a service administrator can perform all the functions that a viewer, user, or power user can perform. So a service administrator can perform all the function in the application. So the different functions that can be performed include viewing data through forms, viewing data through data analytic tools, that is the ad hoc grid, smart view, financial reporting forms, etc. Then entering data through forms, loading the data through data management, submitting the data for approval in the approval unit hierarchy, drill through the source system, consolidation of the business data, that is running the consolidation rule, creation and maintenance of the form, creation of smart view worksheets, creation and starting the approval process for the process control units, performing action on process control approval units, performing all the functional activities for the application except create and assigning user role, dimension management, that is managing all the 13 dimensions, member formula management. So the dimension management is the sole responsibility here. If you can see this dimension management, basically here it is the columns are functionality, viewer, what viewer can perform, user can perform, power user, and the service admin. So service admin has can perform all except till here perform actions on process control. User, power user, service admin, the roles are same, only it has three extra roles. So the dimension management, it is the sole responsibility of the service administrator. Member formula is also the sole responsibility of service administrator, and performing all the functional activities for the application is also performed by the service administrator, but he cannot create and assign user role. This will be performed by the main administrator. So basically in the application there is main administrator and there is a service administrator. So the main administrator is assigned at the time of creation of application will be able to assign all these four roles, namely the viewer, user, power user and the service admin, different individuals in the organization. And from here you can see the viewer can view the data through forms, can view the data through data analysis tools, FR forms, through smart view, through the ad hoc grids, and it can drill through to the source system. The these three, from all these functions, these three can be performed by viewer. User can perform all except last three, that is uh, performing all the functional activities, dimension management, and member formula management. Similarly, the same power user has the rights. The service administrator can perform all these, except create and assign user role, which can be performed by the main administrator, who has defined roles. These are roles to these four individuals in the organization. So yeah, this was all about the TRCS. Uh, Now maybe we'll connect again in our next session. Thank you for your time.